Hey gang, Roger here. I've shown videos before where I've shown you how to use the market cycle, where I've showed you how to use sectors to determine whether markets are bearish or bullish depending on what sectors are rising or which sectors are falling. What I'm going to do today is I'm going to keep it real simple. I'm going to show you three market positions. Each one favors a certain type of sector. I'm going to show you a bullish market cycle, a neutral market cycle, and a bearish market cycle. And then I'll show you a sector that's best to trade during each of these cycles. So let's start off in the beginning. What do we use to determine whether markets are bullish or bearish or neutral? We're going to use the 50-day simple moving average, all right? So why are we going to use the 50-day moving average? What's the significance of the 50-day moving average? Why do traders use 50-day moving average? How do we use the moving average? So all of these questions I'm going to answer for you. The moving average is one of the first and one of the most simplest types of indicators. It simply takes the price by the amounts of days, adds it together, and divides it by the average number of days. So if you have 50 days, it would take 50 of the last closing prices, and then it would add them together, and it would divide them into 50. Fortunately, you don't have to do any of that, okay? All you have to do is take your chart. Every technical indicator, every technical analysis software has the 50-day moving average built in. It's not an indicator you have to figure out by hand. It's not something you have to sit there and calculate on a paper napkin. None of that. You simply put the 50-day moving average on a chart. Worst case scenario, you'll have to adjust days. Because it'll say simple moving average, but you'll have to put 20 days or 200 days or 50 days. We want to use 50 days. If you're doing long-term analysis, if you're doing investment analysis, you want to use 200 days. If you're using short-term, very, very short-term price action, you would use 20 days. The reason we're using 50 days is because the 50-day simple moving average is an industry standard. That's what hedge funds, mutual funds, and all the big traders rely on. It's a thermometer, okay? So if the S&P is trading above the 50-day, equals bullish. The market is bullish. Let's say the market's trading at the 50-day. At the 50-day. Equals neutral. And let's say the market's trading below the 50-day. When I say the market, I'm talking about the S&P 500. Okay, I'm not talking about the Dow. I'm talking about the S&P 500 because it's a broader market, okay? So below equals bearish. And once again, if you're a fund and if you see that stocks are trading, the S&P 500 is trading above the 50-day moving average, that usually gives the fund green lights to become very speculative and press on the gas pedal and start buying. If fund sees that the 50-day moving average, that the stock market, the S&P 500 is at the 50-day moving average, it'll slow down. It'll push on the brakes. And if a large fund sees that the S&P 500 is trading below the 50-day moving average, the fund will start liquidating or going short if it's a speculative fund that allows to go short. Some funds don't go short. Keep that in mind. So now that you understand the significance, and before I forget, when you go to your technical analysis software, you're going to see cumulative moving average, exponential moving average, high and low moving average. What you want is simple moving average or just moving average. You don't want the highs and lows. You don't want exponential, which favors price that's closer than further. You don't want any of that. You want a simple moving average because you want to look at the market from the same perspective as a large fund. So simple moving average. In the next video, I'm going to tell you the best sectors to trade in a bullish market environment. Then in the video after, I'll talk about what's the best sector to trade in a neutral market environment. And in the fourth video, I'll tell you the best sectors to trade in a bearish market environment. Stay tuned. If you like these videos, please like them below. We want to hear from you. Please email us at roger@wealthpress.com or like these videos. It means a lot to me. Talk soon.